Welcome back to Real Estate Mindset. Today's video is gonna be extra special bonkers. Obviously, guys, I have Orlando Minor back with us today. Orlando, how are you, sir?
I am doing great, man. I am doing wonderful. Happy New Year.
Yeah, thank you, brother. Happy New Year to you. Now,
Yeah.
you guys, I have Orlando back here because Orlando is going to go through phase 1 and phase 2 with us of the housing market crash. Now, today's video is on phase 2 of the housing market, essentially surging. This is extra, really good, you guys. Now, remember, phase 1 of the housing market was interest rates. Interest rates lead everything else. Phase 2 is, remember, sales and new construction. Sales and new construction lead prices. Obviously, you guys, we have nice price declines. Now, prices, which is phase 3, leads inventory. And everyone knows right now, you guys, we need inventory, and that's what the Federal Reserve wants. But today, you guys, we're going to stick with phase 2. Before I really go into this video, do us a favor, you guys, like this video, subscribe if you haven't already, shoot us a comment below, and do me a favor, guys, go to Orlando Minor's YouTube page right now, Orlando Minor. Go there and subscribe. I watch all of his videos. I know you guys are going to love his videos. He's a super entertaining and extremely intelligent person. Orlando, did I do better this time? I
I
forgot.
appreciate that.
I forgot on phase 1 to plug your channel. I really appreciate
good,
your time,
bro.
man. I value your expertise. Let me show the viewers, Orlando, a little bit about what we're talking about, where we're at with phase 2. Here's Redfin's data. This is on, pending sales, essentially. So I really want to point out, Orlando, that, right now we're down 31.8% in sales. And I want you to talk about the companies that are going out of business right now, lenders and places and tech and whatnot. But actual sales right now, guys, is down 31.8%. Now, let me show you some stats on new construction. Okay, so here's the chart right now, guys, on new construction's permits. So this is essentially saying, essentially the less permits that are drawn, the less new building, goes on in the future. So we can see by the permits are down big time. I mean, from the peak, permits are down big time. This is the 5-year. This is Fred economic data. I'll show you guys the 10-year. Now, historically, though, Orlando, we're still high. Right? But we're plummeting big time. And the reason we're plummeting big time is sales is down. Interest rates are high.
Yeah,
But I did want to show you guys for sure, without question, builders are slowing down with permits. Okay. But take a look at this. This is the 5-year outlook of the months of supply for new houses in the United States. Orlando, first of all, I want to tell you this chart, they change this chart every month, several months back. They keep manipulating this data. I have all of the proof of this. It's absolutely crazy. Right. So I don't even know what to trust. But right now we have 8.6 months of supply for new construction. So it's not selling. I mean, the inventory is skyrocketing. And look at this last thing. So not only is the inventory skyrocketing, they can't stop building. The amount of units people, why aren't people talking? The permits are down. The permits are down. They're going to be fine. No, they're not. What about all this stuff? I went to Austin recently. I'm still passionate. I'm sorry. But the actual construction, the amount, 1.7 units under construction, insane. Let me show you the 10-year map. Look at this. This is the 10-year. It's just so historically high. Let me show you the max. Okay, so the last time it was this high was never. Okay, so the last time that we had this much construction was never. We've never, ever had, going back to 1970, these many homes under construction. So, obviously what I'm showing our audience, obviously Orlando, is, I wanted to show them where we're at with phase 2. Obviously sales are plummeting, new construction suffering. And I really want to explain the impacts that has on prices. So will you go into a little bit about what you're seeing on your side as far as sales being down and the impact that's having on our industry?
Yeah, so I would like to really explain to the viewers, so I'm on the financing side, right?
Yeah.
Lender side, the money side, and the good thing about being on the financing side, and when it comes to money, is money. It starts always with money, right? People wouldn't, the builders wouldn't build house if they weren't making money. The builders come to me for money, right? So this is the thing, and this is the reason why you're starting to see, why you're seeing the increase of construction, or you're starting to see the prices of these construction homes still, at the same. They're not dipping and crashing at this moment. And the reason why that is because you have to, the thing is, most people don't understand is that the construction, the construction guys, the developers, they take out these short-term
Yeah.
loans, this short-term debt. And when they take out the short-term debt, there is a ticking time bomb on it. They have to make a certain amount of sales to cover the debt payments on that, right? So if they sell, just think about this, guys. If they come down in price on a $200,000 home, and let's say they drop, we're gonna just use soft numbers here. If they cut it by $100,000, that means that they have to sell twice as many homes as they would at the 200. And that's a conundrum when you know demand is down. If you know demand is down, you're thinking to yourself as a developer, I'm just gonna have to hold right now, because if I come down, now you have to bring everything down. All the prices in your portfolio have to go down, and now you have to sell double. And here's the thing, maybe they don't have double the inventory to sell to make those debt payments. So what do they have to do now? They have to build more. And now what's high now in cost wise to build? All the materials, inflation is high. So now you're putting yourself in this cyclone of debt, financial trouble by just bringing down the prices. So the developers have to make a very precise decision when 2023 is coming up, and come to, a walk with themselves and say, do I go ahead and drop these prices and start this cyclone of financial ruin, or do I hold and no one buy and I still end up in that same situation? So it's gonna be interesting in 2023 to see how that pans out, and that contributes to your portion when it comes to sales, and that's the reason why we're seeing new construction offer more amenities than price drops. They're all telling you, we're going to give you a new refrigerator, or we're going to give you new flooring, or we're going to give you the upgraded package, right? Rather than dropping prices.
Yeah. And you know what? And it really goes to show how effective phase one is, how
Yes.
effective the interest rates doubling is, because what it is doing is it's pushing them in a corner. I mean, these new home builders don't want to drop price. They're doing everything they can think of to drop price. And in my local housing market, thank God I'm in Texas, #1 state, new construction, right? So I have a
Right.
special, view of this, but geez, it's not working. They've done the incentives, they're doing all this stuff, and now in
Yeah.
my local housing market, and that's why I went to Austin, in my local housing market in Texas, and that's why I'm like, your market, if it has a lot of new construction, more than likely you're going to be in a metro with a lot of price
Right.
decline. But I guess what I'm trying to say is they have no choice. Orlando, we're starting to finally see that. I think it's going to spiral a little bit more out of control in 2023. But phase two of this housing market crash, the cycle that I'm looking at and reporting on, anyways,
Mhm.
it's firing on all cylinders. I mean,
Right.
sales aren't going up much, and as long as phase one keeps firing on all cylinders, the interest rates keep going up, and I love how you drew that into new construction. Will you
Mhm.
talk a little bit more, Orlando, about what happens if they don't meet those timeframes? What happens to their financing?
Well, what happens is the banks start calling notes, and if you really think about it, here's the thing that I know a lot of people don't talk about because they don't have this perspective. With me being in the finance industry, is banks are don't want to lend to these developers, and they're going to call the notes even faster than they normally would, because we're losing money because the demand is down on lending to regular everyday consumers. So if we're losing money from the low demand and no one taking mortgages, then we want our money back. We need to get that money back as soon as possible. So if a developer isn't going to meet its obligations and pay us back at a certain time, or they're saying, let's stretch it out, can we make lower payments, we're going to call the note. And once that note gets called, that's the reason why you're starting to see all of these developers, or tech businesses, or everybody associated with them, third parties and whatnot, go out of business. Because if I call my note and I say I want my money back, and if you as the developer don't have the money, what are you going to do? What are you going to do? You're going to claim bankruptcy. You're going to shut down everything, and then now we're going to see all these empty units, lots, for pennies on the dollar. That's what's coming up if these guys don't get it together and figure out an answer, a solution to the low demand and the high prices, and keeping their units at the high prices with looming debt behind it.
And honestly, I would argue that we do have the solution. Drop your prices more. You know what I mean? There you guys go. There's the magic.
The funny thing about that is that is the solution. And I'm pretty sure there's a lot of guys out there telling these developers, like, drop your prices. You have to. The market is telling you have to drop the price. Well, a lot of these guys are doing the numbers, and they're saying, if we drop the numbers, like I said earlier, we're going to have to sell double, triple, build more. We may not even have that inventory. But I would argue this. Paying off some of your debt is better than paying none of your debt off. It going into bankruptcy. As a lender myself, if someone comes to me and says, "Hey, we all know what's going on in the market. You guys are feeling, I'm feeling it. But look, I'm gonna drop my prices, and I can't pay you the full 100%, but I can pay you 75% of the debt." I'll be like, okay, we can stretch that out for the other 25%.
Yeah, I agree. I think a lot of them, they're going to have to, Orlando, but not to avoid bankruptcy. But I think it's to weather the storm. I think all they need, I think in their minds, they're going to weather the storm. So the question is how long in their minds will they have to weather the storm? So if they only think they're going to have to weather the storm for 2 years, maybe they only drop prices a certain amount, right? So but I think we go into 2023, and that's what they're talking about. I think that anyone in sales, anyone in new construction is going to ask themselves, how long do we have to cut our prices like this before we can rebound again? Because it's better, like you said, to pay off some of your debt and to sell some than none. And and obviously, as well as I do, if it's priced right, it will sell. Right?
Oh yeah, for sure.
So they still have that in their pocket.
They do. But it's their last. If for them, it's that ace in their pocket. Like,
I know. I don't want to do it yet. But Lennar's already doing it. In Texas at least, and that's why I've been following Lennar. I feel like Lennar, as far as new construction builders, has been ahead of the curve. They have been, from my market, they've been in the front line, discounting, buy downs. Lennar is showing us, to me, what the other builders are going to do. But the problem with the other builders are they're late to the party.
Yeah,
relates to the party. So, how many of them are going to be struggling with those financial obligations, man?
The truth is that some of them, there'll be a lot of that falter, right? There will be a lot of that falter, but there will also be some that get bought up by the bigger guys. The bigger guys will then, consume the smaller guys and take over their inventory and their product and whatnot, and which will then help them spread out their own debt and spread out their own, inventory and whatnot. So I do see that happening. So I think the lower tier individuals will obviously fall off and whatnot, and the top guys like is it Lennar?
Lennar,
yeah, Lennar, those guys, they would, they're gonna, I feel like they're going to survive, but that's kind of due to them kind of starting early. Like the individuals that start early now and understand that it's not going to get better in 2023, they understand it, right? But there's a group of developers that think that this, January is going to be the end of prices going down, and they believe that it's going to go back to 6 months ago when things were just going crazy. That's what they believe, and that's what they're hoping for. And those individuals, man, those developers are going to get crushed, file for bankruptcy, and we're going to just see the collateral damage.
I think so. And that's what happens when sales goes down. We've already seen lenders go out of business, a lot of non-QM, reverse mortgage. Let's talk about Open Door. So sales are down.
The penny stock.
Hey, what's crazy? I put out a video and I'm like, you guys, it's still $1. I wonder when it's going to go under $1. Before the video was done playing, the stock was under $1. So everyone's, it's under $1. Like, I get it. Open Door is really messed up. That was the point of the video. But, with sales being down, the way they are, and with Open Door essentially having depreciating assets right now, right?
Right.
I don't know, because we're talking about them weathering the storm, getting through this market. Do you think Open Door is going to be able to weather the storm? And let me add this: there's bets on Open Door filing bankruptcy in 2023.
What's that?
50%.
Woo.
Fit, dude, I was like, oh my, it's not just me. I'm not crazy. Yes, I'm not crazy. Dude, I looked at this. I don't know where they get these odds, but 50% there's a betting that at 50% likelihood that Open Door files bankruptcy in 2023. And my question is why wouldn't they? Well, they got trapped in the housing market. They're trapped.
Yeah, I did a video on Open Door, and I kind of broke it down because I broke down like their actual debt obligations, and some of their debt obligations in that video that I broke down, man, it's
Shocking.
well, it is shocking that they would take it, but it's very gamble based, right? It's like they believe in themselves that they will be able to sell overpriced homes to people who are gullible enough to buy them, and they will be able to do that for the next 2 years and then take all of that money and make themselves profitable and enrich themselves. And putting that gamble out on debt that you have to pay back or pay a default rate of 20-25% is insane. Is insane. So now we fast forward from when I made that video to today, where, like you said, their assets are depreciating, and they're in that exact position where they're now selling homes at a loss, and then but they bought them. Obviously, they bought them for a higher price. But you have to remember, they are now on that line of credit. That line of credit, they borrowed 80 to 90% on each of those homes that they overpaid for. And now that same loan is now that same amount is coming back to them at a cheaper price. Let's say they bought it, at $100,000, and then now they're going to get they borrowed $90,000, but now they're only selling it for $60,000. That's a $40,000 loss that they're taking. How many of those homes can you deal with consistently over and over and over?
Do they have the collateral to even cover the loan at this point? If they're going 90% LTV?
Well, I would tend to say it's really not about the collateral as it is about the debt obligation. Now they're upside down in homes, because now they can't sell. Now they can't sell. Now they're trying to make money off of their rental income that they have, and it's not enough. So in essence, if you look at their balance sheet over a year, you will see that they're upside down by a huge amount of number. And the funny thing is, they were losing money year over year before that. They weren't profitable. They were losing money before. So what is their balance sheet going to look like in this last quarter here? It's going to be atrocious. And most of their board and investors will probably say the best thing to do is to file for bankruptcy.
Yeah.
I mean, it's in their best interest to do that.
Yeah. Who buys their houses, Orlando? Who saves them? Who buys them?
Well, it's not. Well, you know what? I think the funny thing about that is the people who probably will save them will be the people who will be the creditors that they owe. They will just buy the debt, right? They're going to buy the debt and then everything attached to that, which will be the collateral, the homes. And if the creditor isn't in the business of owning homes, they're going to sell the homes for whatever they can get, so they're whole. So I think the person who's going to win at the very end of this is someone who's looking for a home to live in it. And just make sure you keep an eye out for any of those homes that have been bought up by Open Door. In the middle of next year, they could be on the market for 30-40% discount.
Yep. And that all goes into, that's why we're saying I don't want to use the word wait. Some people freak out.
Right.
Be cautious, right? So Orlando, that's really going to do it, man. I mean, I feel like we hit some really good points here. We don't want to, do it too long, but Orlando, before I go, is there anything you want to say to the viewers before we go?
Yeah, I mean, first of all, again, Real Estate Mindset. Thank you for letting me come onto your platform. I really enjoy it. But one of the things that I would say is really focus, guys, on your local market. I know we talk about Las Vegas, Austin, Florida. All of these markets are vastly different.
Yes.
Vastly
Yes.
different. You look at Miami. Miami just got was just notified as the most unaffordable place. But
Yes.
then you have a place like Austin, who's just taking hit after hit after hit. There are vastly two different markets, guys. And you cannot get trapped in a FOMO mindset of looking at Austin and you living in Florida and say, why isn't my market like that? You have to have patience, because if you don't have patience in this game, that's when you lose at this. You guys have been waiting too long to try to get into a home, try to buy a home that is affordable for you and your family, to only lose out because you didn't have patience.
That hit my soul. That hit my soul. Orlando, it hit my soul because I lost everything. I already had a foreclosure, repo, bankruptcy, and tax lien.
Mm,
That hit my soul, man. I don't want people to learn the hard way. You guys don't have to
right,
listen to us. You could learn the hard. I hope everyone just learns, man, from our mistakes.
for
Orlando,
sure.
from the bottom of my heart, man, thank you so much for coming on. Thank you for your expertise and your time. Sit with me for a second, okay?
Yeah, no problem, bro.
All right, guys, don't forget, go to his channel, show him some love now. If you're out there investing in real estate, I wish you luck and I hope you win.